This conference will now be recorded.
All right, good afternoon and welcome to the Clear Lines training session. I am your host, Kipp Cohen. It is Thursday, the 27th of June, 2019. I am here for the next, about 55 minutes today. Here to cover the Clear Lines indicator running on the Medved Trader platform. If you have any questions, please do not hesitate to submit them through the GoToMeeting player. You may also email them to me at kip@equity-alerts.com, or you can send me a text at my cell phone, 972-841-8886. This is a twice weekly training session. It is geared towards the Clear Lines indicator and the Medved platform. This session is for subscribers of the Clear Lines or for those that are interested in becoming subscribers. If I didn't say it, it is a recorded session and will be posted to our YouTube page. You can get to the YouTube page by going to equity-alerts.com. Oops, something happened. Hold on one second. Oh, that's weird. You can go to the Equity Alerts page, and at the top where you'll see a YouTube link, click that, and that'll take you to our YouTube page where the videos will be posted. One second. I didn't really have any set plans for today. I did want to spend a little bit of time talking about RSI. It's another indicator that we are starting to look at. As an added tool. Oh, you know what? Hold on one second. Okay, that was weird. I had to fix something. One second. Anyway, so I will spend a little bit of time on that. I do have a question from Chris. Kip, with dragging the stop market capsule to modify a stop, I'm getting a reading that I cannot change a box order. I do not like that feature. However, I can just cancel and recreate the stop. It does prompt me to call the broker with questions, your thoughts. So first of all, who's your broker? Chris, who's your broker? And you should be able to just, oh, Ally. You should be able to just move the stop. Let's find a stock and test this with. I want to see what's happening. Let me see if I can find something that's right here. We'll use KB Home. Okay, I'm going to put in a short, and I'm just doing this as a test. Okay, so the short is in. Oh, you're in X. Okay, well, well, let me close this out. Let's put X in. Okay, are you long X? I'm gonna do a buy on X. Okay, so you're in X and I'm in X. So you're just using a stop loss, correct? So that would be stop, sell. Okay, so it'll let you move it around. So I'm going to set my initial stop, let's say down below the low of the day. And then I'm going to send the order to the broker. You can check under positions to see your pending order. See, it says sell 500 at stop 1502. You should be able to see that. And then you should be able to either click on the price, double click and move it up or down, and then hit the check and modify it, or you should be able to sometimes this happens, it won't let you, here you go, grab it and move it up or down. And then click the M button. And you're saying you cannot do that? Um, hmm. So it only lets you can only cancel it, and then you have to put in another one. What happens if you try to double click on the price and then scroll up or down and then hit the check and then hit the modify? What happens? This is running through Ally MBT. This is not through Ally Direct. Ah, okay, that worked. Okay. I don't know why you're having issues with moving the capsule. What happens if you put your mouse on the capsule, like over anywhere on the capsule, hold your left button down and then move the capsule. Try doing that also. See if that works, and then hit the modify button. See what I did? So I put my mouse on the capsule, I click the left button and hold it down, and then I move the capsule up or down. And then when I release, then I hit the modify. That might also work. Did that work, Chris? The other way I just showed? Now it's working. Yeah, weird. I'm glad you got it going. So I did kind of, I took my popper dropper layout and kind of modified it and made this layout just to kind of create a different one, because this one has, so this has my two primary charts, my 1 and 3 minute, and then I have a 5 and 15, as well as a short-term chart. And the short-term chart has ATR on it, just so I can see what the recent trend was. The primary charts are my 1 and 3, and I have a lot of specific indicators that I'm using on the 1 and 3 minute. The 1 minute I'm using parabolic stop and reverse. I'm using daily pivots, DMARC pivots, and Fibonacci pivots. And then I have just added RSI. And usually RSI is on a separate chart, but I have it on this chart. You'll see it's this green looking line. It's kind of hard to see, but really the only thing I'm concerned about is seeing that number right there, that in green. That's the RSI number. Above 70 is overbought, below 30 is oversold. And actually, what's interesting is that when it gets into overbought or oversold territory, you should actually see either green like this or red like this when it's in one of those zones. But one of the things one of our traders, Carl from Houston, does is he looks at on a 1 minute his RSI along with parabolic stop and reverse, and is looking for those reversal points once it's been overbought or oversold, and then a shift in the parabolic stop and reverse. And we're realizing that it does tend to work pretty well alongside with the clear lines when you get when you get an arrow. So in other words, in a long scenario, we would want to see an oversold situation where the RSI gets below 30, and then we'll want to see on a 1 minute the green arrow turn, flip, the clear lines curve up, and we get a confirmation arrow that locks in, and then we want to see the parabolic stop and reverse shift from the top to the bottom, and that would be our signal to help us get long. It's just a stronger confirmation signal. Now, one of the things I can remove off of here is under trading. I don't need chart trading from this chart or this chart. I really only need chart trading from two charts. My 1 minute, which is my entry, I use that for the entry, and I use the 3 minute for my exit, my stop or my bracket. Because there are certain indicators I look at on a 3 minute basis to help me find an exit. So I don't really need a whole lot on these two other time frames. It just kind of muddles things up. And in honesty, I really don't even need candle countdown or pace. Candle countdown is probably not a bad one to have because you know how much time's left in the candle. And plus you know what time frame you're on. So that's not a horrible thing to know. I don't want to have too much on all my charts. And then let's see, on this layout, I really don't need average true range there. Or on this one. Since I have it over here. I was using it in case I needed to go to a 390. So let me save this layout. I'm calling it my new active layout. And again, it's just something I'm playing with. And that's one of the things that I encourage my users to do is to build and find layouts that work good for you. That's the great thing about using the Medved platform is that it is modular. So that you can build out all kinds of different layouts. And of course, if you have a multi-monitor setup, it definitely makes it easier to spread out charts onto different screens, and you can add account view and add a lot of different other aspects of the platform. But I wanted to do a single stock layout that had a few extra time frames and included the daily chart so you can see the daily trend, or you can flip between the day, week, and month, just so you can quickly see the overall trend. It doesn't have to be real large because, that's not really critical. Just knowing the direction of the trend is what's really critical. Let me save that layout again. Anytime you make any adjustments, you want to save it. So let's look at some other stocks, and I'm going to close out this X trade. I want to look for something that could be overbought or oversold, and maybe meet the criteria that we were looking at, and kind of see how helpful that is using RSI in addition to the other indicators that we have listed. I think, this market is, as we all know, is constantly changing. And as the market changes, you do have to make adjustments to how you trade and what you're using. So anything that can give us a little additional edge, I think, is always going to be helpful. So we can kind of scroll through, and I'm just looking for anything that has this number right here on the 1 minute, either overbought or oversold. So below 30 or above 70, just to see if there's anything right now that might be an overbought or oversold territory. And of course, right now, there's like nothing, which, this time of the day can be challenging. Actually, Tesla, here we go. So Tesla is almost in overbought territory. There you go. It just hit 70. That's this number right here. Now, obviously, Tesla is on a rip right now. It's been in a pretty big up cycle. And this is the advantage of having the multiple time frames. So I see on my 1 minute, my 3 minute, my 5, and my 15. Tesla's been pretty strong. The trend of Tesla overall has mostly been down, except for the last month it kind of popped back up. So to help me find a potential reversal point, what I may want to do is draw that first 15-minute fib level. Because we know stocks tend to follow the Fibonacci levels. Boy, I tell you where Tesla would be good. I don't know if it can get there. This D-mark halfway point, DMH, 222.86, or that's on the 3 minute, which is an all session chart. So this is based on a pre and post market. This one is the current day session. Its DMH is close to the 200, 223.33. I don't know if it's going to get up there. That's about $1 away. And we just got up to 70, although it didn't close the interval in overbought, but it went above 70, and we're getting a down arrow right now on the 1 minute. Now the problem is down arrows in a strong uptrend are not always that great, because a lot of times you'll see, like right here was a down arrow. It went down a little bit and then turned and went higher. This one was a brief one that went higher. So now it is coming back through the 1618, which is a positive, and then we just now got two parabolic stop and reverse shift changes. So this might not be a bad spot for a short for Tesla. I'd say at this point it's still a little risky because of the strength of the uptrend on all the minute lights right now, and that we don't have a cross down on the 3-minute. That's really what we want. To reduce the risk in the trade, we want a confirmation that our 3-minute is in tandem with the 1-minute, the 3-minute cross. Because what can happen is you'll get a short pullback on the 1 and then it continues higher. In essence, it ends up being a false. There you go. Now we're starting to build that 3-minute. You can see the arrow just populated. It's not complete until that interval is done, and that's not for over 2 minutes. 2 minutes and 40 seconds. So that could undo itself. So at this point, it's a riskier trade. Now you could enter half position, start out. So let's start with 100 shares. Well, guess what? It's not even shortable. So I can't even, all that for nothing. I was going to test out Tesla and I can't even short it. And look, it's starting to drop. So that actually would have been a good short. I mean, we can just watch it and see what happens. It was 222.10 when I was on the bid when I was trying to get in. We still have a minute and a half left for the 3-minute before that's locked in. So we used a combination of the overbought, although it never, you can see the highest closing was 69.3127. So even though the number went above 70, we didn't get a close, interval close above 70, so you won't see that. So there was a 71 right there. There's a 73. So it got overbought. But we got into overbought territory. We got a confirmation arrow on the 1-minute, and then we followed it up with the parabolic stop and reverse. We now have a 3-minute that's just about confirmed. It's got about 22 more seconds, and then that's going to be locked in and it can't go away. Of course, Tesla is bouncing a little bit from here, not too much. All right, so another couple seconds. There we go. All right, so now that 3-minute down arrow is a lock. That will not go away. That interval is completed, and it is there to stay now. So that's a good confirmation. A 1-minute, 3-minute down arrow. We got a little into overbought territory. We got the parabolic stop and reverse. We went a little bit above the 1618, but we came back through it. So that was a good sign when we broke back through the 1618. It basically came up right off the top of the Bollinger Bands on the 3-minute, which we also like to follow. It was not at any of my pivot points. That's the only negative. That would, again, add a little risk to the trade. What you have to do is look at your different indicators And then based on what you see, you're measuring risk. Risk based on whether it's taking, hitting up against a lot of your indicators or not. The more indicators in play, the more points of reference you have that could confirm a good reversal point, the higher probability of success. So if you hit a Fibonacci level, you hit a pivot point, whether it's a Fibonacci pivot, daily pivot, or a DMARC pivot, and you get overbought, you get a PSAR shift and come off the top of a band, all those factors, the more of those that are met, the higher probability of success of the trade. That's the way I measure. It doesn't mean you can't take a trade if they're not all met. It just means it's a riskier trade if all your criteria have not been met. So the things you can do is that if it's a riskier trade, you can take a smaller position. If you would have normally taken a 400 or 500 share position, maybe you take a 100 or 200. And those are the things that you kind of have to decide. That's kind of part of your trading plan. Your plan will dictate share size based on risk. Riskier the trade, probably the fewer the shares you should take. And more importantly, if there is a higher level of risk, you better have a high level of reward potential. Now, the way you can measure reward is by looking at, again, different levels where the stock could go to, right? Levels like other Fibonacci levels, pivot points, Bollinger center line or bottom of the band, prior support and resistance levels, things like that. So like at first glance, when I look at, or we like to use the VWAP as a point of reference. So if I was looking at Tesla as potential profit targets, obviously my first target is going to be where I thought it would be somewhere around that 140, because that's also right on the middle Bollinger Band. If it broke that, then the next level most likely would be somewhere down in this range, because you had a confluence of Fibonacci pivot, bottom Bollinger Band, and the 100% fib. And then if it could get through all that, then our next level down would be right in here, because that's where the VWAP is and the 786. So you can look at these different levels to help guide you as to where you can potentially set targets. All right. So being that if we deem this was a riskier trade, then at this first level, the reward is not that great for the risk. We were 222.20 was where we were looking at it, wasn't it? 222.20 or 222.10? I don't remember. But is it worth risking 40 or 50 cents to make 40 or 50 cents? You don't want all, you can do some one-to-one risk to reward trades, but I think you want a greater reward, especially on a riskier trade. You want a 1-to-3 or 1-to-4 risk to reward ratio. Now, if it could get down to this level right here, the VWAP at $120 and change, that's a $2 reward for a 40 or 50 cent risk. That's a good risk reward. That's a 1 to 4. Okay. Even if it got down to Fibonacci pivot in the bottom of the band, that's one to two, 1 to 2.5 risk to reward. Again, not a bad risk to reward trade. Much less than that, not so great. Now, if everything, all the stars lined up and it met all my criteria and it was at a fib and a pivot and VWAP or PSAR and all the stars lined up, got my arrows, then I'm okay with a 1 to 1 or 1 to 1.5 risk to reward. You just want to make sure by the end of the day that you average out at least 1 to 1.5 or better. Again, you can do some 1 to 1s if you have some 1 to 2s and 1 to 3s, but you don't want all your trades to be 1 to 1, because if you're only accurate on half your trades on a given day, at 1 to 1, you're not going to make any money. At 1 to 1.5, you'll make money. 1 to 2, you're going to make decent money, as long as you're at least 50% accurate. All right, a couple questions from Chris. I used to use the 2-minute chart. Do you like the 3-minute chart better? I do like the 3-minute. I've kind of quit using the 2. I use the 1 and the 3. Actually, 1, 3, 5, and sometimes 15. I use the 15 just for drawing fib levels. Yeah, I think a 3-minute tends to be a little, especially when you're using a 1-minute or also a half-minute, because we use a half-minute in the first 15 to 20 minutes and then we flip to 1. I think the 1 and 3 tend to work together well. So yes, I like it better. I've pretty much given up on the 2. I think you're either going to use 1, 3 or 2, 3. I don't think you want to use 1, 2. You could use 1, 2, 5. But in that instance, I think I go to half-minute, 2-minute, and 5. Do you prefer preset plane pivot points or preset Fibonacci pivots? Asking because a lot of the lines on my chart to look at. So it is a lot of lines. And let me remove the. And you do need to make sure you're using bigger charts or they get a little squinchy. But I'm using only on my 1 and 3-minute am I using all 3 pivots. On the 5 and the 15, I only use the daily pivots, and so I use the daily pivots, and I have VWAP on here. And then for the daily pivots, I use all, make sure you have all 1, 2, 3, and 4 support and resistance checked off. Because I use, and these are, I have my data set extended hours to never on these 3 charts, just because, these 2, excuse me, that one doesn't. These 2 charts strictly are showing regular session because of the time frames. If you start showing after hours, I don't like the way it looks. So on my 1 and 3-minute, my 1-minute, I use current day only. Current day. So prior to the current day, I don't see pre and post market. Only for today, I see current day. And for the most part, the pivot points will line up with the 5 and 15 on the 1-minute. The 3-minute is where it gets a little confusing, because the 3-minute I view always for extended hours. So it's going to give me every day's pre and post market data. So that gets calculated into the pivots. Okay. The daily pivot, the Fibonacci pivot, and the DMARC pivot. So you'll notice, like on Tesla, my Fibonacci pivot on my 1 minute is 221.50. My Fibonacci pivot on my 3-minute is 220.69, 220.69. So those numbers are vastly different. And it's because this chart is taking into consider all of the prior pre and post market data versus this one only looking at the current day pre-market data. So is there a reason to do that? The only reason I have found is that some days, some stocks will work off of current day pivot points. Some days they work off the all session, especially if there's a lot of pre and post market activity, you know, like on the poppers and droppers. You almost have to have it on the poppers and droppers, because if a stock gaps up pretty big, a lot of the times the it's going to blow out the pivot points. Okay, so like let's look at KB Homes. KB Homes is up 8%. So KB Homes on my 5 and 15-minute charts is trading above resistance 4. See that? It's above R4, and it's same on my 1 minute, because the 1 minute is using current day. But so notice right here, the Fibonacci resistance is showing up on this chart, but not on this chart. And the reason is because this chart is taking into consideration all of the pre and post market data. So you'll see that, and I'm going to go to a 200 bar view so you can actually, I'm going to first, let me expand this one so you can see all of today. So using the DMARC and the Fibonacci pivots, you'll see that this morning, basically KB Homes bounced off of that DMARC, the DMC, which is the DMARC center line. And we have found afternoon support on Fibonacci resistance 1. That was also proved to be somewhat of a top this morning. Even though it did shoot above it, it ultimately was a, well, actually, whatever this line was up here. What is that line? Hold on. Look at that, R1. R1 of the all session was the resistance for KB Homes this morning at the open. Now, you would not have seen that if you were on this chart on the 1 minute. Here's the open, because it blew out those levels on the current day session. Does that make sense? I know it's kind of odd, but it's something I kind of discovered, or someone else recognized it, and then I've started following it, and I'm like, okay, there's actually something to this. Someone noticed that there were differences, and then I kind of latched onto it and said, well, I need to watch this to see if there's value in it. And there's turned out to be value, comparing on a 1 minute and 3 minute using current day versus or never, you can never does the same, or because current day and never are almost identical, and using the all session data to calculate that, because again, when you have days where there's an overextension, outside of a normal range, you're a lot of times not going to be able to pick up those pivots. But today, I mean, this was perfect because this morning's reversal was R1 of the daily pivot, and the bottom turnaround point was the D-mark center line. So those are the 3 pivot points that I use. And again, I just use those on the 1 and 3 minute. That's pivot points on a daily basis, daily pivots. D-mark, okay, on a daily, using the daily pivot and looking at the center, high, and low lines. And then the Fibonacci pivots on a daily, using the daily pivots. And again, showing all the levels. So by having that, all of that pre and post market data, that gave us helpful points to see where it was found its top and bottom. Now you could have also, you would have seen that in the, obviously in the charts, but seeing that secondary visualization where you can use these as points of reference. So in other words, great point of reference that you got short up off one of these levels. Even if you got short down here further and you're trying to figure out, well, where is it going to go? Well, if you saw that D-mark center line, that would give you a point of reference of where it might head to today. And then if we couple that with maybe once we get our first 15-minute Fibonacci level, so if we draw the first 15-minute fib, now let's go back to the 3-minute. So let's say you saw all this morning. You saw that range, you drew the first 15-minute, and then you got an entry right through here, maybe when it broke VWAP, right? You kind of had a nice confluence right here. You had a down arrow and a break of VWAP. So if you got short here and you're trying to figure out, well, where the heck is this thing going? All right, well, you found the initial support at the 786. It broke it and hit that D mark. It bounced and actually went through the D mark and went back and retested the morning low, the 100 line of the first 15-minute. So this, when it went back, tested it, and then came up through the D mark, would have been your exit point. You could have used that. My point is that these different Fibonacci, these different pivot points and Fibonacci levels are just going to help guide you. That's all they are. They're going to guide you, help you figure out where you potentially could lock in profits. I mean, you can do what a lot of the times that we end up doing is just trail it manually with a stop, but having points of reference in mind where it could go is going to help you maximize your profitability. Okay. And when you can set a bracket order, we like to use volume weighted average price. That is tends to be a good spot for stocks to move back towards. That doesn't, we can't always use that, but it is something we can use to guide us. But you know, it comes down to obviously using money management and risk reward, and we have found that using trailing stops, whether it's a true physical trailing stop or what I tend to do is I use a manual stop that I trail with. That's what helps you maximize your profits. Anyway, I'm kind of rambling on a little bit here. We just have a couple minutes to go. Any other questions today? Chris says, my 3-minute is set at extended hours in current day. What do I do to change it? Well, your 3-minute should be, under extended hours, you said it's set to current day. So you just have to go to that drop down and switch it to whatever you want it to be. So on my 3-minute, it's set to always. Always is going to give me all pre and post market data. Remember, once you make that kind of change, you probably want to save your layout, resave your layout so that, I mean, it should save it anyway, unless you go back and physically change it. But if you have to reload the layout and it wasn't saved with that, you'll lose that setting. But yeah, view, and then under extended hours, click the drop down and go select always or default always. I think either one is the same. I use the one that says always. Just on the 3-minute. Because again, when you have periods where stocks have big moves, you need that to see to get your pivots, or you're going to blow them out a lot of the times. And they do function from, I mean, using all those 3 different pivot points do work with all the after hours data. I know sometimes it can be confusing, and sometimes it's like a lot of information to look at, on your charts, and it can make it a little, busy. So, the more screens you can have, the bigger the chart you can use, the better. That's why if you have a multi-monitor system, 4 monitors or 6 monitors, and you can maybe maybe only 2 or 3 charts per monitor, that'll help you out a lot. Just having that bigger charts. But again, we all look at things differently. Our brains process, our eyes process visually differently. So whatever works best for you, that's what I would go with. And you're welcome. I appreciate it. I'll make sure to get this one posted. Just about out of time. I want to thank you guys for being here today. Again, if you have questions outside of the session, don't hesitate to ask. You can email me directly anytime, kip@equity-alerts.com. You're welcome to text me on my cell phone, 972-841-8886. If you're an alerts member, obviously anytime in the webinar, I'm happy to answer questions there as well. And if you need some one-on-one assistance, don't hesitate. I'm here to help. Quick reminder, next week, just one session on Tuesday. We will not have a session on Thursday due to the 4th of July holiday, I'm taking the day off. And I will be posting this to YouTube later this afternoon, so you can come back and watch it. It may be late today before I get it up. I've got some things to do here in a little bit, but again, thank you, and have a great afternoon, and I'll see some of you all tomorrow in the webinar. If not, I'll see you next Tuesday. Have a great afternoon. Bye-bye.